COVID-19 crisis curbs the housing market. Curbs, but doesn't crush. Allow me to explain. The Toronto Real Estate Board reports year-over-year prices because they state that takes out seasonality. It makes sense. Obviously, reporting December from one year versus December the next year, year over year, it makes sense. However, it's also somewhat less meaningful than reporting the month before to the month before. Wouldn't you agree? Case in point, if we look at year-over-year stats, which Toronto Real Estate Board publishes, it says April 2020 versus April 2019, prices went up $1,244 or 0.15%. Okay, so all other things aside, it seems like the market was relatively stable. Yet the reality is it was anything but stable. So let's dive into it, shall we? Year over year, the sales actually went down 66.9%. Again, it's year over year. So how meaningful is that? And they said the active listings actually went down 41.4%. Okay. And year over year, sold as a percentage of new listings dropped over 40%. Now, in terms of month over month, which is a lot more meaningful, you be a judge. Monthly sales dropped in 1 month. April 2020 versus March 2020. Sales dropped by 169.31%. That's right, 169.31%. From 8,012 to 2,975. And what about sold as a percentage of new listings? They dropped 62.46% from 75.05 to 28.17 in April. What about the absorption rate? That rate indicates what type of a market we're in, whether we are in a seller's market, a balanced market, or a buyer's market. And for point of reference, we've been in a seller's market for over 97% of all the months in the last 23 years. Seller's market is when 20% or more of the listings sell. 20% or more of the listings sell based on a base of what's outstanding as at the end of the previous month. Okay? So a balanced market is when between, in round numbers, 15 and 20% of the market inventory sells. And a buyer's market is when less than 15% of the inventory sells. All right? Now, that being said, we've only been in a buyer's market 4 months in the last 23 years. That's it. Okay? We've been in a scorching seller's market, term I coined, because we've been selling well above 3 times that, well above 60% for months. In fact, we take a look at March, it was 75%. February was 82%. Really? Yeah. So here's the good news for the buyers. The buyers that did buy in April, they saved, on average, $81,288 from the month before. Now, just to put this in perspective, how significant of a change is that? Is when we look at the lottery market, which is the previous high point, April 2017, before the government introduced the B20 stress rules. Okay, the average price for the month in April 2017 was $920,791. We compare it to April 2020, that's the drop of $99,399. The bulk of the drop is in April 2020. So, which absorbs $81,288 of that. Significant, over 80% of that differential in 1 month. Okay, obviously, a lot of the buyers stayed on the sidelines. For the buyers that acted, though, my goodness, they're going to be talking to their great-grandchildren about this in terms of how much they saved. Why do I say that? Because is this going to continue? Here's what's going to happen. Well, there's only three things that can happen. We're either in a crisis, coming out of a crisis, or going into a crisis. So what was really startling is when I took a look at the sales, and you're going to see this on your graph, what really stood out is that the last time sales dropped to this low level hasn't happened since January of 2009. Okay, what happened January 2009? Well, remember, November 2008, global financial crisis hit. Real estate prices in the United States started decreasing because of the mortgage subprime crisis. And what happened here in the GTA? Well, we caught a cold. They caught a pneumonia. We caught a cold. And prices for the 4 months, we were in a buyer's market. And however, in March 2009, bounced right back again. And we were right back in a seller's market. So here's the thing is, it always comes down to demand supply. And when demand is greater than supply, what has to happen? Prices eventually have to rise. I'm just telling it the way it is. And so if you're opportunistic as a buyer, you're going to take advantage of these market corrections that are only temporary. In fact, TD Bank has already forecast that average prices in Toronto are forecast to go up 7.8% this year versus last year. And they forecasted that just last week. Despite the COVID-19 crisis. So, keep that in mind. Be opportunistic as a buyer. Get out there. Seize the opportunity. You're definitely going to help your family by doing so. If you're a seller and you have to sell, there's still opportunities to sell, providing it's marketed right. However, I will say this. If you don't have to sell, then definitely hold off. It's in your best interest to do so. And we're always here to provide you with the right advice, timely advice. So remember, we always guarantee our services. If you're buying, we'll guarantee you're going to be happy with that home. And if you're not, for whatever reason, we'll buy it back or we'll sell it for free. Contact us for details. And continue to be opportunistic. Thank you.